Welcome, Aditya. I want to introduce my good friend Brendan Foo, who I've been working with for a couple of years now. Um, and Brendan has taught me a lot about how to invest safely, what to look for when we make an investment in a new founder or a repeat founder. Um, Similarly, when you're a founder looking to take an investment from an investor, there's a lot you could deserve to know about that person before you embark on a relationship. So I thought it would be really topical to introduce my network of friends, of entrepreneurs and investors here in the Silicon Valley and beyond to Brendan. Brendan, over to you.
Thanks so much, Louis. And thank you so much to Tian and the rest of the crew here for setting this up. It is a special pleasure for me to get to do this event with Louis. We have had the delightful opportunity to work with Louis and his team on actually both sides. When we sold our company in late 2022, it was Louis who counseled us and was there for us the entire way. And now we get to work with Louis and his other clients, helping them to do good deep dive investigative due diligence ahead of their deals. And so, getting to be on the seller side ourselves, now working on so many buy side mandates, we've been able to really see all different sides of how Louis is able to really act as a strong strategic advisor to folks on both sides. So it's been a great pleasure working with the Foley team thus far. So just a little bit of an introduction to who I am and what my firm does. We are Forward Risk. We're a global investigations firm headquartered in Washington, D.C. Obviously, as you may have heard, we got sold, so that's kind of cool. Our parent company, Forward Global, is a Paris-headquartered risk and reputation management firm. And so we do work around the world. In-house, we cover over 75 jurisdictions. We have almost 30 investigators. We have done hundreds of projects on the buy side for VC and PE clients. We do a lot of work in contested situations as well, shareholder activism, litigation and arbitration support. And we finally do some strategic intelligence work, including market entry, political risk, bespoke intelligence gathering projects. We find that we love working with the Foley team. They are, like us, a global firm, but at the same time, they have a very local touch and a very bespoke touch where you pick up the phone, you get the principles, and we enjoy the way they work and the way they work with their clients. So that's been a very good relationship thus far. So,
Brendan, how did you get into this business?
Oh wow, I got my start in the world of foreign affairs and policy, realizing that I was doing a lot of research and investigative work in the intersection of different traditionally unrelated sectors. And it was the complexity of understanding what to do when you don't know what to do that drew me into this space. It's even better to be able to turn what I find interesting into something that is financially viable and to be able to turn that into a career. So we got our start years ago working with a major activist investor. So we started out doing a lot of work with public markets, where, as you can imagine, everything that you do, every piece of information that you find has to stand up to the highest levels of public scrutiny. You take that approach, turn that around for private markets, and our clients in the private market space find that this approach is one that is sophisticated and nuanced, but at the same time gives them the sort of what is premium and industry leading, but at a very, very competitive price point. But enough about me. Let's talk a little bit about why investigative due diligence is useful for you and what exactly we hope to get out of today's session. So what I hope to talk about today is to help you investors to figure out exactly what investigative due diligence is, why it's different from what you may have thought it was, why it matters, and how it interacts with different parts of your due diligence process. I'm also going to give you a couple of hopefully helpful takeaways when it comes to engaging with providers of such services and figuring out how such providers like my firm can interact really well with your outside counsel, in this case folks like Louis and his partners, to ensure that you have a one-stop shop for your risk mitigation, but also for your value maximization purposes. So getting straight into things, why use an investigator? Um, at a high level, and feel free to stop me and tell me that I'm wrong, but maybe do it nicely. The idea in PE and VC is that you're investing in the company or idea, but you're also investing in the key operators. You're investing in the founder, the management, the executives. A great operator can turn a good idea into the next unicorn, but at the same time, a mediocre operator can make that growth journey a lot more tedious than it has to be. And so applying investigative due diligence as a separate part of your investment process really looks into the founders and the executives and the people behind the story. What I hope to explain in the coming slides is that it's a little bit more than a check the box background check kind of thing. I've seen these companies that are online where you can kind of plug in a name, plug in an address, boom, it spits out a report in 20 minutes, costs like $200, and you're set. But what we are doing here is a little bit more than just pulling that data. It's really kind of thinking about the story in two other ways. One, what are the limitations of the data that's available online? What is available that we know about? What's not available that we don't even know about, right? The unknown unknowns. And secondly, being able to piece that data together into a story that gives you really good intelligence about how someone operates, what goes through their minds when they operate, and as a result of that, how you can engage properly or effectively with them when it comes to your investment strategies, your engagement strategies, etc. And so to kind of break it down, what we really hope to do here is to maximize the upside while minimizing the downside. So on the upside, we talk about deal terms as one avenue. Working with lawyers and financial advisors, performing effective investigative due diligence can help you to figure out where you can structure the deal to be better, to increase the upside on some of these. So as an example, if you are investing in a company that operates in a particular industry that may be facing headwinds, or if you're investing in a company whose upstream or downstream may face headwinds, being able to price that in and finding out a little bit more about that by understanding how the company operates in its space, who its competitors are, for example, could help you to figure out perhaps a repricing of your transaction. In a negotiation or competitive bid situation, understanding who you're bidding against, but also who you're bidding to, can often be that one, the final piece of the puzzle that helps you to win. So we've actually been brought in on multiple situations way early in the game where our clients, say we are involved in this bid against 1, 2, 3 other people. We want to show that our competitors in this bid process are going to just strip it for parts and break it all up. And if you're the founder and you're listening to one bidder tell you, hey, that other bidder is going to be, stripping it and selling it for parts. Well, that may not necessarily be what you want. But how do you understand what the founder's looking for? That comes down to understanding what the founder's motivations are. Are they incentivized by an immediate cash infusion? Are they looking for legacy? Are they looking for something that their family members can continue to work at and help grow as part of their sort of succession plan? Understanding these different elements and philosophies and motivations as part of a deal is something that our clients have found extremely useful in the past when it comes to both connecting with the people behind the companies, but also doing so in a way that's, a little bit pugilistic, right? I'm a little bit better than that other bidder because look at me doing all this work ahead of time and connecting. And I find even the act of doing that work sometimes shows the seller, that these buyers are serious, and that's been something that has given a lot of our clients just that little bit of a competitive edge that's pushed them over the line. Yeah, at the same time, another point of investigative due diligence is to minimize downside. So we think about that from a couple of different perspectives. One of them, of course, is your track record of the operators. Let's think about how they have worked with other counterparties. At the start of the call, Louis talked about repeat entrepreneurs. Let's look at how they've entered and exited different companies. Are they still involved in all these other companies? Do they have potentially, do they have any potential conflicts of interest? Are they potentially overboarded? Are they going to be a little too distracted handling everything else that they're busy with? Are there going to be competing priorities? we look into, of course, and I want to point out, of course, that sometimes, when I talk to investors, they'll say, yeah, but the ticket sizes are a little bit smaller. Do I really need to go that deep? Right? That's a constant question. You're kind of balancing cost, timing, resources, and quality. And one of the things that we look out for there is not just, sort of, are there criminal litigation, are there criminal records, or is there civil litigation? You're looking at the story behind these people. And so something as simple as, he's got like a data dump would look like there are 5 civil lawsuits. Boom, there you go. An investigative piece of intelligence would say there are 5 civil lawsuits. They all happened in the last 5 years, and these all happen to have been with former business partners. However, it appears that in each of these cases, here was a context, right? So you add context, you add story, and that gives you a sense of, okay, who are these people we're getting in bed with? And more importantly, now pulling in Louis and his team, is there a way to legally structure this to mitigate against that risk so that I don't find myself in the position of being lawsuit number 6? So there's a lot of different ways of making use of that information and finding the right legal partner to help you to turn that from here's the data into here's the intelligence into now here's what I can do about it to safeguard myself. That's really the key of this equation. Other things that you might want to look out for include legal, reputational, regulatory risks. So things that we look at include employee turnover, Glassdoor reviews, things that might suggest a pattern of maybe potential upcoming litigation from employees, former employees, competitors. Is there some sort of behavior in the workplace that you should be aware of? Are there potential dynamics there that you should be aware of? And again, are they operating in particular industries that might be the focus of upcoming regulatory actions that you might be aware of? These are all things that we are thinking about so that you don't necessarily have to. And as an example, in one case, to talk a little bit about how this could actually turn around to be a source of value, when it comes to looking beyond the initial sort of downloadable background screen thing, we looked into a founder of a company that our client was interested in investing in or acquiring outright. And as part of the work that we do, we go deeper and we looked into his immediate family members. And we found that his daughter used to work at the company for a couple of years, but she had left maybe a year or two back, and she had set up another company that was somewhat involved in that same industry, but they weren't competing. If anything, that daughter had set up a company that was supplying certain equipment to her father's company. So you find that piece of information, you think to yourself, okay, this could be one of a couple of different things. It could be a good thing or it could be a bad thing. It could be a bad thing in the context of what if this is just a way for the dad to continue to fund the daughter, ad infinitum, right, into the future. No one knows that the daughter has a company that is supplied to the company that is being sold. On the other hand, our client looked at that as, oh, cool. They looked into the purchases, they looked into the transactions. They were all, sort of market rate, arm's length type transactions, and they actually thought, hey, you know what? This could be a really good opportunity for us to roll that up. And so they actually spoke to the founder and said, hey, connect us to your daughter. We're interested in buying the company as well. And they ended up buying both companies and rolling them up into one platform. And for them, that was value that was uncovered as part of the diligence process.
That's a great story, Brendan. That's a great story. I want to kind of zoom it out a little bit and make this really relevant and personal for the folks in the audience. Those of you who are founders, you should expect that an investor who's writing you a check of $1 million or more is going to pull a background check on you of some kind, whether it's 1-800 people off the internet, or if it's a more sophisticated investor and any one of my investor clients, they'll be using Brendan or one of his competitors to pull a professional report. And that the difference between a professional report and one of these online searches is that the professional firms have licenses to operate as private detectives, and they have access to databases that the internet searches will not be able to pick up. And so the information is a lot more reliable. So what are they looking for, investors? Well, the first thing is they're looking for, do you have a criminal record? And you know what? We live in an imperfect world, and we're made up of imperfect people. And just because there's something on that's going to get pulled in your background check certainly shouldn't scare you or make you think that there's a problem. But it's certainly something that you should socialize with the investor before there's a critical moment in the process. And what is that moment? You'll know it when you feel it. But if it's a DUI that's on your record, it's perfectly okay to say, you know what, 10 years ago I was having a problem, and I've been in recovery, but you'll find this out when you do the search, and I'm happy to answer any questions. And you get ahead of it. Nothing worse that you can do as a founder than try and bury one of those things under the rug. Now, many of these things that we do as kids, as minors, we think are expunged from our records, and you should absolutely, make sure that your record is clean. But sometimes those will pop up on a background check anyway. So just because your record's been expunged doesn't mean you shouldn't get ahead of something and talk about it. The next thing that I think we're looking for is, do you pay your taxes? And so when I see a tax lien against somebody, particularly if it's been for a long time in multiple states, I think, well, this person is not reliable. If you don't pay your taxes, that is going to bite you, and there's just no two ways about it. The third thing we're looking for is repeat litigation. So if you're a plaintiff in more than one or two lawsuits that aren't explainable as directly related to the business that you were in, we're just going to think you're a litigious person. And that goes both ways. We're going to look at when you were employed by whom, where did you go to school. We're going to look to make sure that if you said you had a PhD from Stanford, that you actually have one, that the years match up. And so those are important details to get right. Now, similarly, if you're an investor, I don't think that founders are in the business of pulling background checks on you, but I certainly think that there is no more important relationship than that between a founder and her or his investor. And the more that you know about each other, the better off, the more informed that relationship will be. And it always starts out with such a beautiful honeymoon, like all good relationships, and then really, where does it go from there? And if you're an investor, being very candid about your history of investing and your history of what's worked and what hasn't, I think is certainly relevant. So when I'm a founder who's about to take a big check from an investor, I want to reference check the investor. If I don't have the money to do a background check, I'm certainly going to reference check. I'm going to want to talk to at least 3 other CEOs that investor has funded, and what was the relationship like? What was the board atmosphere? What was the cadence of those meetings? Was that investor available in between meetings? Did they help? Number one job of an investor director is to support the company. Are they going to be there? So these are things that you want to learn, and folks like Brendan can help us learn a lot. Now, your law firm, whoever it is, whether it's me or anybody, has access to a pretty sophisticated set of databases already, so we can find out a lot without going to Brendan. But we are not professional investigators. This is not what we do. We just have a lot of databases for various reasons which we can access. So we can certainly, I can tell my research team to go check a litigation docket in a specific place, or even maybe nationally, but I can't pull together the panoply of resources that Brendan can, and I don't have people that are professionals in doing so, that with access to all the databases, nor that can dig into people's social media, for example, and find things that Brendan and his team have found. So it is a step way above what we can do. Who should be engaging, Brendan? You get a level of protection with your attorney-client privilege if it's your attorney that engages the investigator. And I think, Brendan, you may have already touched on that, but it is slightly better if the law firm does it and then can protect the privilege so that it's never produced in any kind of litigation. I want to make this a conversation, and I invite folks to jump into the chat with questions and or stories to share. Otherwise, I'm going to pass it back to Brendan to take us through the rest of the slides.
Thanks, Louis. And yeah, please feel free to raise your hand or just chime in with any questions, or if you're If you don't want to ask your question out loud, feel free to type it into the chat box. We're gonna make this as interactive as possible. I will say one thing that you talked about, Louis, about the importance of getting up out ahead of the issue or ahead of the investor finding out. I think that's something that we have seen to be true again and again and again in our experience. If you think about, if you cut out all the legalese, all the technical elements of what we do, it really is just something as simple as you, the founder, are entrusted by the investor to be a steward of their assets moving forward. They need to trust that you have the temperament, the integrity, the know-how, the commercial instinct, the right reputation to be able to be the right steward. And so it comes down to, would you trust them? Dinesh, you asked about cost and various tiers depending on investment and deal size. That is a great question. That is actually something I was going to be talking about later on. But yes, this costs anywhere from $1,500 to $15,000, depending on how broad or deep you want to go. And what we do is we work with the individual investor to determine how to package together an offering that best fits what they're looking for. So if you were doing kind of a smaller deal where you might be looking into one CEO plus say 3 others around them, but the CEO is really instrumental to the company. They are essentially synonymous with the company. You might want to give the CEO a deeper dive, but go lighter on everyone else. If it was say something a little bit even smaller than that, where you had kind of that more targeted focus, then that'd be a little bit different. You might go a lighter touch on all 4 of them. There are times where you may even have heard of certain things out there in the market. You may have gotten a bit of a weird gut feel about something, and you say, "Hey, we want to do the deep dive on, say, the CEO, but there's this other guy who we're not really feeling as good about, not feeling as comfortable with. Could you look into those particular issues that we're looking into?" And those are things we can do as well. Sometimes, and this is going to be, I'm going to get over to the next slide, which might show you a little bit more about this. You might do the public records work, the open source work, and you find, hey, you know what? There's not that much out there on these people. They have a low profile or they have a really common name. But I want to go deeper. I want to get a little bit more information about that. And in those cases, in addition to running the open source work, what we do is what we call human intelligence, where we identify people who may have worked with them in the past, who may know intimately their reputation, their track record, their character, their commercial instincts, from having worked with them or having heard about them or worked across from them within the industry. And yeah, sorry, new question here. But yeah, just to finish off that point, and in those cases, we'll talk to people and essentially do what an investigative journalist might do to get you a good investigative dossier. We've got a question here from Ninesh who asked if we're able to help with situations that may need investigation after the deal is done, but and if something went wrong. Yes, in a situation like that, I think the real question that we would ask is what went wrong. So understanding what went wrong would be very, very helpful, and we can help focus our research in those areas. This would be one of those classic moments where getting us engaged via outside counsel, in this case Louis, would be almost critical because we've seen these situations lead to litigation in the past. And so with our work covered by attorney-client privilege, that protects that from discovery. But it also means that you have now the benefit of a strategic advisor who knows the legal side of these things, who's working closely with us. And with the benefit of their experience, plus our experience, we can give you something that is a lot more useful. So in a situation like this, say you got into a deal and it turns out that they were lying about their numbers, lying about their customers, lying about the business. Great. What we would do is we would do a full background investigation on the primary principal, and depending on the nature of what went wrong, maybe it's the sales, maybe it's the HR, we would look into those people as well. We might help to do internal interviews with people who you present to us. Again, with the cover of an outside lawyer, talk to them and put together our findings so that you have something that can give you some comfort as to next steps. We don't tell you what to do with it, that is something that is within the legal purview of your lawyers, of course. But the information that we do develop from such interviews, from such fact finding, can hopefully lay out a clear path as to what the key downside risks might be at that moment, but as well as where the sort of central focal points of the problems might be coming from. So without knowing more details, I think that's probably what I'm going to be saying for now, but happy to answer more questions and specifics on a one-on-one basis. Great. So I'm going to talk a little bit about methodology. As you can see here, I'm not going to go too deep into it, but the key takeaway here, as Louis mentioned earlier, is that as you can see from this slide, it is a very particular skill set, and we are specialists at this. We are licensed, we are trained to do this, and it gives us access to databases and resources that we're able to put together to best develop investigative dossiers or investigative intelligence on the folks that we are looking into. The understanding of not just what is out there, what is available out there, but what is not available out there is also very important, because there are times where, if the information that we can get is decidedly non-comprehensive, and sometimes that might be if you're looking in a foreign jurisdiction, or if there are privacy regulations that govern the availability of such information. It's important that you are aware of that as well, right? So we've come across investors in the past who have come to us and said, hey, we are working with this other investigations firm, and they say that they can get us bank account records, and we'll say that does not sound legal. So you have to be aware of what people are offering you and where they might be trying to give you something that's not legal. We came across in the past a situation where someone called AT&T pretending to be the individual themselves. And if you have the right amounts of information about an individual, like their date of birth, their addresses, you can kind of hoodwink your way into getting personal information. As you can imagine, that ended very, very poorly. And so it's, again, important to work with folks who are engaged by counsel, because what happens in those cases is then that we get bound by the same rules that bind the way your lawyers are supposed to act. So everything is being handled above board ethically, but also in a way that is focused on making sure that you can make best use of the information that you're getting. I'm going to skip through these slides very quickly because you guys all kind of essentially know that. How can an investor do better financial due diligence before the deal? What recommendations do you have there, and how would you guys be able to help? So we don't do financial due diligence per se. We don't go through the books. We don't go through the numbers. For that, you're going to really need someone who is actually going through that piece.
Yeah, Brendan, let me jump in and take that.
Yeah.
So Dinesh, great question. If you had a larger target, you would typically hire one of the big four or their regional brethren who have an M&A team, and they would do what's called a quality of earnings report, and essentially testing the audit procedures that the company's accountants and auditors had used. Now, in smaller seed deals or early stage deals, that's not practical. That's $100,000 piece of work, and it takes a month or two. And early stage happens at the speed of light, as we all know. So, what in practice do we do? I work with a number of smaller fractional CFOs and smaller, what I'll call external CFO firms, and I usually will ask that one of them jump in and have a look at the accounts and assess the state of readiness. As we all know, in early stage, we have to crawl before we walk and walk before we run, and it's perfectly understandable that an early stage company is using QuickBooks, but we know QuickBooks isn't GAAP. And we do know that revenue needs to be tied to contracts. So one of the easy things we can do is ask to know who are the top 5 customers and what are the contracts. Can I see the contracts? Then compare the revenues that the contract seems to be forecasting with what the company has been booking, either as revenue or bookings. So these are kind of simple things that a smaller, what I'll call mom and pop or agile advisor can do to get comfortable with the finances? It's a great question, and I think that investors should do more checking on that. I have noticed, given the difficult times that we've been in, other than generative AI, that, and even in the generative AI space, that investors are looking very carefully at the contracted ARR, or the CAR number. And some companies are reporting ARR, which is in fact the next 12 months of contracted ARR. And I think that's an explainable difference. But I have also noticed that there are some companies who have had some trouble in keeping accurate records, and later on investors are going back when companies go south and saying, hey, what happened here? Where did all the money get spent? And I thought you all had contracted revenues of X, but it doesn't appear that you did, and doing some investigation there. And so it is really important for founders to have to bring their finance function along with the stage and state of growth that they're experiencing, and being extra careful with how they compute and communicate on those numbers, as oftentimes the CAR number is how the investor is valuing the company. And so if you said your CAR was 2 million, but it was in fact 1 million, and you got a 10x multiple of that, your investor, if they find this out later, is going to demand a 50% reduction in the value and 50% more shares, which is going to come out of who? It's going to come out of you. So those are important details to get right. It's a great question, Dinesh. Back to you, Brendan.
Thanks for taking that one from me, Louis. So I sort of previewed this one a little bit earlier, but here are some considerations for why you want to engage via counsel. We talked about ethics. We talked about resources. One of the questions that you asked earlier, Dinesh, gets us directly to the idea of customizability, right? Where you want to have a customized investigative approach based on your particular need rather than something that's off the shelf. Investigators also able to turn things around along tight deadlines or tight turnarounds to fit your transaction life cycle. You want to make sure that, of course, you are letting your attorneys focus on what they do best and let their partners focus on what they do best. It's the technical specialization of labor there. But I think the most important takeaways that I have from this piece here is really the idea that, your investigators and your attorneys, they've been working together for years. They have that iterative relationship. They've seen a whole bunch of different deals come and go. They've seen other situations come and go. They've seen the craziest situations. They've seen the most mundane situations, and no two transactions are exactly the same. And so they are well placed to react and proactively forecast or predict what might happen and help you to react to those situations in a clear and confident manner. The idea of, sometimes when you get an investigative report and it looks like the sky is falling, everything is bad, but working with a lawyer who has seen that in the past and is able to tell you, well, okay, this looks bad, but is it really? No, right? And one example of that, obviously the situation with the daughter that I was telling you guys about earlier, but we did a couple of deals or engagements for an investor that was investing in some cannabis companies several years ago, right when that industry was taking off. And one of the founders they were looking at had a whole series of criminal hits in his background, but they were actually really happy about that because that meant that this guy had a real good track record going back. And if anything, it was one of those things where if you didn't have a criminal record for marijuana or whatever, it's like, well, did you really have the experience you claim to have had in this space?
That's a great story.
So different experiences, because this is sort of work that we are doing day in and day out, and that comes to the fore when it comes to providing, sort of research and intelligence that is customized for you, for your need, and is well contextualized. Talked a little bit about ethics earlier, but just one thing to be aware of all the time is beware of people who are promising you the world, because chances are you need to figure out where it's coming from. You might have legal barriers to certain kinds of information, permissible use issues for investors, for folks who are doing fraud prevention, such as what your investors might be doing or what you might be doing when looking into an investor. We might be able to pull SSNs. We can do a lot of additional research, but there are situations where you cannot use this information. So having a lawyer who knows when and where you can deploy that, very useful. Having investigators who know where and when you can deploy that, equally useful. I have a couple of case studies here. I'm going to skip through them because we are about 40 minutes in, and I really want to engage in the dialogue with you. I think we will be sending out my slides, our slides, as a post webinar handout, so you can have some fun reading those and come back to us to talk about them. But I want to really bring us back to the takeaways here. Effective use of investigative due diligence can help you to optimize deal terms and mitigate risk. We've seen examples of how the kinds of information that you can find can help you to renegotiate pricing or structure it a little bit differently to ensure that you're protecting yourself or allowing yourself to further reap potential upside. We also talk about how it's really important to ensure that you're working with trusted outside legal counsel that has its own trusted investigative partner, because the fact that they work together for a long time, the fact that they know each other and know how to contextualize the findings means that you're getting something that's actually useful for you. We talked about the fact that it's important to work with investigators who are mindful of and cognizant of ethical considerations. Because first off, if you end up in litigation because the deal goes sour, it's one of those things where you pray and hope never happens, but you need to be aware of the possibility that it could end up there and make sure that you are not putting yourself in a bad position should it end up there. In a case like that, working with someone who is mindful of ethics always will set you up for success and put you on better footing ahead of that. And finally, context matters on the front and back end. On the front end, the more information the investor or the requester, the client, can give, both to legal counsel, both as well as to the investigative team, the better. But on the back end, we need to reciprocate and ensure that as we deliver findings, as we deliver the intelligence that we've painstakingly gathered for you, that we're also contextualizing that and telling you what that means within the overall scheme of what you're trying to accomplish. That's equally important as well. So I'll leave you with these takeaways. And I've had a really good time speaking with all of you today, answering your questions. Thank you again, Louis, for the kind invitation. And please come at me with any questions you may have.
Brendan, it's a pleasure to have you, and thanks to my old friends and new friends for having joined. We will try and circulate a quick post of takeaways with a copy of the recording, so that you can share that with your friends. And we hope to see you all in real life or digitally very soon. Thanks again for joining. Have a great day ahead, everyone. Bye-bye. Bye, Brendan.
Bye-bye. Bye, Louis. Take care.